Is XDC gearing up for a bigger run over the next cycle? Today we're breaking down what the XDC network is, why institutions care about it, and where credible forecasts think price could go. First, the basics. The XDC network is an enterprise-grade, EVM-compatible blockchain built by Shinfin for trade finance, real-world asset tokenization, and cross-border settlement. According to the official XDC network site, it uses a delegated proof-of-stake design and positions itself as a hybrid, business-friendly chain for tokenizing invoices, letters of credit, and other financial instruments. Why the renewed interest? Tokenization is moving from pitch deck to pilot. Banks, custodians, and fintechs are testing how on-chain rails can speed up settlement and improve transparency in trade and supply chain finance. That is the lane XDC is trying to own, and it's why long-range forecasts are getting attention. Now to the numbers. According to a July 4, 2025 roundup from the StealthEX research blog, 2030 projections vary a lot depending on the model. Digital coin price sits on the conservative end, with an estimated 2030 range around 29 to 33 cents and an average near 32 cents. Price prediction is more optimistic, with a band roughly between 50 and 59 cents and an average a little above 51 cents. And then there's Telegaon, which is extremely bullish in that same StealthEX roundup, floating a 2030 range between about $3.97 and $5.65. That spread from cents to multiple dollars tells you how uncertain long-term adoption and token economics still are. StealthEX also compiles far-out scenarios that some sites publish for 2040 and 2050. Price predictions distant horizon posts cited by StealthEX suggest figures in the tens of dollars by 2040 and even higher by 2050. Treat those as speculative moonshots, not base cases. They assume global tokenization at scale, steady enterprise demand, and years of execution without major setbacks. So what would need to happen for the middle path to play out? According to StealthEX's overview and the XDC network's own positioning, three drivers matter most. 1. Real production volumes in trade finance tokenization, not just pilots. 2. Easier institutional access, custody, compliance, and liquidity so larger buyers can hold XDC alongside tokenized assets. 3. Steady developer activity that keeps fees low and uptime strong while apps ship on-chain. Let's balance this with risks. Enterprise blockchains live or die on integrations. If banks decide to standardize on other L1s or rely on private ledgers with tokenized claims settled off-chain, XDC's share could be smaller than the bulls expect. Competition is intense, regulation can slow onboarding, and token unlocks or treasury decisions can weigh on price. The wide forecast spread compiled by StealthEX is a reminder to size positions with caution. What should you watch in the coming quarters? Track tangible metrics, new tokenized programs that actually settle on XDC, growth in active addresses tied to business flows, and exchange liquidity that makes larger tickets possible. Also watch for partnerships that connect XDC into custody, fund admins, and trade finance platforms. If those pipes harden, the conservative forecasts look achievable. If they stall, the conservative end becomes the ceiling. Bottom line. According to StealthEX's 2030 roundup, credible models cluster between roughly 30 and 60 cents, with one outlier in the multi-dollar range. According to the XDC network site, the thesis is enterprise tokenization and trade finance, so the price path will follow real adoption. Keep an eye on production-grade deals, not just headlines, and let the data guide your expectations. You've been watching Cryptozard News. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future.